All righty, folks. It is CPI week, and something we do all the time with Mr. Taylor from Life Goal Investments is talk about it. And if you go back and look at his playlist, we've actually disagreed more than we've agreed on this topic. So we'll let Taylor as the guest go first.
I will admit I've been the loser on most of these. Full disclosure.
So I got to tell you, I saw the expectations this weekend. They were so shockingly low. I thought it was fake news. I thought somebody was punking me. I'm sure you've seen it, but for the audience, last month was 6. We're talking CPI headline. Expectations are 5.2. There is a large base effect rolling off this month, which is helpful. Commodities were down likely at the reporting, but I got to tell you, a 5.2 seems like a setup for disappointment to me. But what say, Taylor?
That's a really low number. So if you look at last month, again, to your point, it was at 6. The month prior, if memory serves me correctly, I think you could check me on this, is 6.4. So it went 6.4 to 6. Now we're expected to go from 6, doubling that disinflationary decrease down to a 0.8% lower, down to 5.2. That's a big number. I'm with you on this one. Like, I am really optimistic that inflation is slowing. And I think all of the economic data points are saying that. And to your point, commodities rolled over big time last week. Nat gas was down 9.3% last week. It's down 40% in the last 3 months. Yikes.
Yeah. So like any kind of these key economic reports, there are kind of 3 things, right? So I think what the market is telling us is they're set up for a 5.2, 5.3 kind of number. So let's play the 3 angles. Let's say it comes in at above that. Let's say it's 5.4 or higher. I think that will, I think right now a 25 basis point is a lock. I think 5.4 and higher gets us that 25 basis point raise on May 3rd. What say you?
What that does in the bond market is it pushes the yield curve further into inversion.
Okay.
So what it'll do is it'll drive the front end, the 2-year note higher, because right now there's like a 70-30 chance is what the market's betting that we'll get that rate increase. So if we get that 5.4 and above number, that will push almost certainty on that rate increase. And guess what rate increases do? They slow down the economy. And guess what the 10-year treasury does? It falls on that data. So what you'll get is a further inverted yield curve if we get that data coming out at above 5.4. And then on the other side, from a stock market perspective, it'll be ugly. It will be ugly because what you have here is the Fed continuing to slam on the brakes, driving consumer debt to be more expensive, driving company debt to be more expensive. And the more economically sensitive sectors of the market, more interest rate sensitive sectors of the market, I meant to say, we'll see that as a bigger punch in the face, i.e. tech.
Yeah, I think so. Let's say it comes in at 5.3, 5.4, kind of on the screws on the number, what the market is expecting. I still think at 5.3, the Fed goes on May 3rd. You may disagree with that. Again, 5.3 is above 4.8, which is where it's at now. I think they want to get us to 5. But what do you think about that?
I agree. I think that it is more likely. So my personal opinion, and not that anyone gives a darn about that, but my personal opinion is the Fed doesn't need to go anymore. You have a rollover in commodity prices. You have a rollover in economic information that we're seeing across the board. The consumer is struggling, et cetera. I think inflation is behind us. But to your point, Jerome Powell has made it very clear that the clear and present danger is that 1970s recreate themselves. And we don't want to see that. He doesn't want to see that. So he says, listen, I know how to control inflation. I can control inflation with higher rates. And therefore, that's what he's going to do in all likelihood if we get a number around that expectation.
Yeah. So now let's play the other side. Let's say we all are surprised. And I might even say shocked. Let's say it comes in at 4.9 or lower. I think it comes in at 4.9 or lower. You could take a rate increase off the table for May 3rd. That's totally agree. I will admit with that. Yeah.
Totally agree, because that is a meaningful move from 6%. That would be a percent shaved off of inflation in one single month. That would be historic type numbers. And that would be before we have this. And maybe we're having this because, again, you don't know you're in a recession until 6 months thereafter. And that's when they declare it. So that would tell me likely that we are currently in a recession, and we'll know 6 months down the road from now that looking backwards, we're already in a recession. That'll be a really big indicator if inflation comes down that much.
Yeah, one of the things I put out on my channel, I think it was the first of the month of April, is I think the recession will be called Q2, which is earlier than most people are saying it. I think the consumer changed. I think that's the SVB thing. I think all the banking turmoil, again, it turned into a nothing burger, but you can't scare the consumer. And now we're seeing, again, the well-to-do pull back on discretionary. Costco was the first sign. Actually, the first sign was a flash report from MasterCard, then Costco, and now Apple this morning. I'm like, man, how many more signs do you need that we've stopped spending on discretionary?
And guys, this is a big week because earnings get reported on Friday by the big banks, Citi, Wells, JP, and BlackRock, which is not a bank, but it's an asset manager. All of them will be reported this Friday. So this is the first look we get at big, meaningful, economically sensitive banks telling us where we are from an economic standpoint.
Folks, we've just realized what topic number 4 is going to be. We're going to get into that next. But Taylor, how can people follow you? And let's just, I always ask, you can guess, what do you think CPI print will be Wednesday? Just wild ass guess.
Yeah, so I think it's going to come off big. So I'll put it at 5.4, 5.3, 5.4.
That's my number, 5.4.
Big movement downwards. Is it 5.4? Yep.
Yeah.
All right. Well, we'll see.
Hey, we actually agree for once.
I'll go 5.3 then, for the record.
Okay, you go 5.3. I'll go 5.4. Yeah. Why change now? Taylor, where can people find you?
Yeah, follow us at Life Goal Investments, both on Instagram and on TikTok. Again, it's Life Goal Investments. We do a little different stuff on the 2 platforms, so it might be worth following us on both of them.
And if you ever want to see an epic rant about housing, go check them out. We did a video on it earlier. It was classic. Thanks, buddy.
You're the man, Michael. Thank you.